Welcome to The Explainer. Today, we're unpacking a story that seems, well, impossible. We're looking at India's economy in early 2026, a place where you've got a massive, roaring boom and a major crisis happening at the exact same time. So, how can that be? Let's get into it.
Right. This is the central puzzle we're trying to solve here. You hear headlines celebrating record-breaking growth, but then in the next breath, you hear about a full-blown international crisis. It just doesn't seem to add up. What is really going on?
Okay, so let's just lay it all out. On one side, you have the domestic story, and it is all sunshine. We're talking a massive 7.3% growth forecast, and businesses feeling more confident than ever. But on the other side, a huge storm is brewing on the global stage, with things like 50% tariffs and foreign money just fleeing the country. So let's start with the good news, with that domestic boom.
So, what is actually powering this incredible strength from within India's own borders? Well, believe it or not, a lot of it can be summed up with just one number.
This number right here, 59.5, is the HSBC Composite PMI for January 2026. And look, I know that sounds like a bunch of jargon, but think of it as the roaring sound of India's domestic economic engine. It's a measure of the health of the private sector, and it's telling us something pretty incredible is happening.
So real quick, the PMI is basically a survey of what companies are doing. Are they buying more stuff, hiring more people? Anything over 50 means you're growing. But a number like 59.5, that's not just growth. That is rapid, aggressive expansion that seriously blew past what most economists were expecting. It's a sign of a really, really strong internal economy. And check this out. It's not just one area that's doing well. The growth is broad. You've got the massive services sector, think tech, finance, all of that. And you've also got the manufacturing sector, both showing really strong momentum. It's like every part of the engine is firing perfectly. And this isn't just some short-term blip. Big institutions like the IMF are taking notice. They've officially upgraded India's forecast, making it the fastest-growing major economy on the planet. But while things look amazing at home, that international storm is getting closer. Okay. Let's switch gears and look at the other side of this paradox. While India's domestic economy is thriving, there's a serious external crisis brewing, and it's being driven by some major geopolitical friction. And here's the main antagonist in our story, a massive 50% tariff wall thrown up by the United States, which just happens to be India's biggest trading partner. We're not talking about a small tax here. This is a direct, heavy hit to a huge range of Indian goods. And look at the sectors being targeted. These aren't random. They're going after labor-intensive industries like textiles, garments, and jewelry. These are sectors that employ millions and millions of people. So this isn't just about balance sheets, it's about livelihoods.
The immediate effect? A shock to the financial markets. It triggered what one report called a significant rotation of capital. Now, in plain English, that means international investors got spooked, and they started pulling their money out of India. Fast.
And when I say fast, I mean it. In just the first 2 weeks of January, foreign investors yanked over 22,000 crore rupees. That's about 2.5 billion US dollars out of the Indian stock market. That is a huge amount of cash to exit in such a short window. And this chart, this perfectly illustrates the battle that's playing out every single day. You see the foreign investors selling everything off. But at the same time, you've got domestic Indian investors stepping in to buy, essentially acting as a huge shock absorber against that capital flight.
So you might be asking, how is India defending itself against this financial storm? Well, it turns out it has a very powerful tool in its arsenal, a massive war chest built for exactly this kind of situation.
Take a look at this number, over $700 billion. That's India's foreign exchange reserve as of mid-January 2026. This is a formidable financial fortress, built up over years precisely to withstand these kinds of global shocks.
And this isn't just a giant pile of US dollars. A huge and growing part of it, over $117 billion worth, is in gold. That's a classic move to hedge against geopolitical risk and a falling dollar. It's a very, very deliberate strategy.
Which brings us to another piece of the puzzle. Okay, so if India has this massive financial shield, why is its currency, the rupee, getting weaker and hitting record lows? It seems totally backward, right? Well, the answer is that it's actually part of the strategy. India's central bank is intentionally letting the rupee fall, but in a controlled way.
Why? Because a weaker currency makes Indian products cheaper for other countries to buy. It's a natural way to help offset those crippling U.S. tariffs and keep their exporters in the game.
But, and this is maybe the most counterintuitive part of this whole story, exports are actually surging, growing at their fastest pace in months. So how on earth is that possible in the middle of a trade war?
It really comes down to a clever three-part play. First, Indian companies are hustling, finding new customers in Europe, Asia, and the Middle East. Second, you have some U.S. buyers who are rushing to place big orders now before things potentially get even worse. And third, that weaker rupee is making Indian goods an absolute bargain for everyone outside the U.S.
So when you put it all together, what you get is a picture of an economy in a really precarious balance. It's like a high wire act, with incredible domestic strength on one side and some very serious global risks on the other.
And what really matters here, the thing you should take away, is this stark divide. You have the real economy, the one made up of factories, shops, and strong local demand, and it is thriving. But at the same time, the financial economy, the one that's plugged into the global markets, is under siege.
So the key challenge for India for the rest of the year is this. Can it use all of this powerful internal momentum to adapt to a new global reality where protectionism is on the rise? Can it pivot and grow even when its biggest trading partner is building walls? And that leaves us with the big question for the future, and not just for India, but for everyone. In today's increasingly fragmented world, can domestic strength ever be enough to permanently insulate a country from global risk? Is being an economic island even possible anymore? That's the question we're all trying to figure out.